So, what is excise tax on business? Under the NIRC, applied it is applied to goods manufactured or produced in the Philippines for domestic sales or consumption, or for any other disposition into things imported, as well as services performed in the Philippines. It shall be added to the value added tax imposed under Title 4 of the NIRC. Excise taxes imposed may be based on weight or volume capacity or any other physical unit or measurement, and it shall be referred to as a specific tax. It may also be based on the selling price or other specified value of the good, and it shall be called as ad valorem tax. This will be further discussed by my group mates later on. Excise tax is another kind of business tax. However, we should be wary of the fact that um, excise tax excise taxes in the NIRC are different from the excise tax or privilege tax that is mentioned in old cases. Such taxes are referred to tax imposed on the enjoyment of a privilege or practice of profession or business tax. While excise tax in the NIRC, as I previously mentioned, it applies to services and to goods manufactured or produced in the Philippines for domestic sales, consumption, or any other disposition, and to things imported.
So, in a case, the Supreme Court explained in the 2015 case of Chevron Philippines versus CIR that under Section 129 of the NIRC as amended, excise taxes are imposed on two kinds of goods, namely goods manufactured or produced in the Philippines for domestic sales or consumption or for any other disposition, and things imported. Undoubtedly, the excise tax imposed under Section 129 is a tax on property. However, note that this case was promulgated in 2015, so it did not yet include the services because the train law was not yet in effect. Next slide, please. So, excise tax versus VAT. In VAT, zero-rated buyers have expressed statutory basis which allows them to claim refund for the VAT passed on them by their suppliers. However, in excise tax, buyers cannot claim refunds because there is no statutory basis. Hence, it is only the statutory taxpayer who can claim a refund. The main difference between excise and VAT is the ability of the buyer to claim a refund. So, next. So, who are the persons liable to pay for the excise tax? It depends. When it comes to domestic products, according to Section 130 of the NIRC, it is the manufacturer or producer of the goods. But if the goods are removed from the place of production without paying the tax, the owner or person having possession of the goods shall be liable for the excise tax. On the other hand, when it comes to imported articles, Section 131 of the NIRC states that the importer or the owner of the goods shall be liable for the excise tax. However, when it comes to tax-free articles brought or imported by persons exempt from tax, which are then subsequently sold in the Philippines to non-exempt persons, the purchaser shall be considered the importer and will pay the duty and the tax on such importation. However, a reading of Section 130 of the NIRC also provides that when it comes to indigenous petroleum, local sale, barter, or transfer, it is the first buyer, purchaser, or transferee that shall be liable for the excise tax. And when it comes to exportations, it is the owner, lessee, or operator of the mining claim. So, next.
So the second question is, what are the classifications of excise tax? There are three classifications. Is as mentioned, specific tax, ad valorem tax, and mixed specific and ad valorem excise taxes. A specific tax refers to the tax imposed which is based on weight or volume capacity or any other physical unit of measurement. A tax charged as sold per unit sold. As an example, think of gasoline taxes, which you pay in the price of 9 out of 10 of a gallon, thinking you're just paying for the price of the gasoline. Specific taxes can be uniform or tiered. Uniform specific taxes create a price floor or the minimum price. Furthermore, uniform specific taxes tend to lead to a relatively higher prices, even on low-price brands. Uniform specific taxes compared to ad valorem taxes may reduce incentives for consumers to switch to lower price brands because they generate smaller price difference between lower and higher price brands. A uniform specific tax is easy to implement and administer because only the volume and not the value of the product needs to be ascertained. Since tax revenues are based on volumes rather than on prices, revenues from a uniform specific tax are easier to forecast, more stable, and less dependent on industry pricing strategies. However, the real value of the specific tax will be eroded unless it is regularly increased, at least in line or with inflation. Next slide, please.
The second classification of excise tax is ad valorem tax, and ad valorem tax is Latin for according to value. Thus, we can say that ad valorem tax refers to the excise tax which is based on selling price or other specified value of the goods or articles. These taxes are levied on fixed percentage of the value of the goods or service. And an example of this is a property tax. Ad valorem tax then is an excise tax, means a tax levied on selected products based on value such as the retail selling price, the manufacturer's or factory price or other costs, insurance free price. Next. Ad valorem taxes is also expressed as a percentage of a certain base value, which can be the retail selling price containing all the applicable taxes, the manufacturer's or ex-factory price, or the insurance freight or CIF price. Thus, compared to a uniform specific tax, the ad valorem tax lead to larger differences in price between lower and higher price brands and increase the incentives of consumers to switch to cheaper brands. Use alone, the ad valorem tax can lead to more price competition and consequently to a lower average price. An ad valorem tax is more difficult to implement and administer because both the volume and the value of the product need to be ascertained. Your ad valorem system may be susceptible to product undervaluation in order to reduce the taxable value of the products, particularly when ex-factory or CIF price is used as a tax base. The undervaluation problem can be averted by implementing the minimum specific tax floor. The use of minimum specific tax floor then ensures that a certain minimum excise tax will be collected on all brands, regardless of their selling price. Since tax revenues are based on both volumes and prices, revenues from an ad valorem tax are more difficult to forecast, less stable, and more dependent on the industry pricing strategies. Ad valorem taxes have the advantage of maintaining their real value when prices rise with inflation. Next slide. So the third classification is mixed and ad valorem excise tax. Mixed or hybrid excise tax structures apply to both specific and ad valorem excise taxes. Mixed systems usually combine a uniform specific tax, which has a relatively more impact on less expensive brands, and an ad valorem tax, which has a greater absolute impact on more expensive brands. So in a mixed system, the emphasis is placed on either the ad valorem or on the specific element, depends on the national circumstances and the policy objectives being pursued, while the ad valorem component increases absolute price difference and consequently promotes the use of cheaper brands, undermining public health objectives. The specific component reduces the relative price difference between cheap and expensive brands and contributes to minimizing the variability of prices. A mixed tax structure then seeks to combine the advantage of pure specific and pure ad valorem taxes. It is more complex to implement and administer than a uniform specific structure because both the volume and the value of the product need to be ascertained. In here, a mixed tax structure is less susceptible to product undervaluation than a pure and ad valorem tax system. So, to further reduce the susceptibility of undervaluation, a minimum specific tax floor can be applied. The use of minimum specific tax floor ensures that a certain minimum excise tax will be collected on all brands regardless of their retail selling prices. So, next is that since tax revenues are based on both volumes and prices, revenues from a mixed tax structure are more difficult to forecast, less stable, and more dependent on industry pricing strategies than tax revenues under a uniform tax structure. However, the real value of the total tax will be less eroded over time by inflation than under a uniform specific tax structure. Next.
Okay, so in order for us to understand what excise tax really is, we must first know what are the purposes of the government in imposing the excise tax. So excise tax are imposed for the following reasons. First is to curtail consumption of certain commodities which are considered harmful to the individual as well as to the community as a whole. So ano nga ba yung mga example? For one example is that the excessive excise tax on cigarettes is intended to discourage the consumption of health harmful products. Isa ring sample dito are those liquors. So next one is to protect domestic industries from competition caused by similar imported products. The precise example on this one is that the excise tax of 20% based on gross selling prices on importation of jewelry is intended to provide greater competitive price edge to locally produced jewelry. So, this one, para ma-support yung dito sa domestic industry natin. And next.
The third purpose of imposing excise tax is to distribute the tax burden in proportion to benefit derived from a particular government service. As an example for this one is the amount of excise tax per liter on leaded premium gasoline is a burden to those who are considered as affluent to have a car. Car owners who are the ones who are enjoying the most benefit for the use of road constructed through tax money. And lastly, excise taxes are imposed to raise revenue. An example for this is that the excise tax on the manufacturing of a car and for its local sale are mainly to impose the raising of revenue. Next.
So now let's proceed to the items that are subject to excise tax. So these items can be classified into 5 major groups, which are the following. So we impose excise tax on alcohol products, tobacco products, petroleum products, miscellaneous articles, and on mineral products. So the first one would be distilled spirits. So what are considered as distilled spirits? So when we speak of it, this is the substance known as ethyl alcohol, ethanol, or spirits of wine, including all dilutions, purifications, and mixtures thereof. This shall include our favorites: whiskey, brandy, rum, gin, and vodka, and other similar products or mixtures. So we also impose excise tax on wines. So these wines may include sparkling wines, champagnes, still wines, and carbonated wines depending on its alcohol content. We also impose excise tax on fermented liquors. So this includes beer, lager beer, ale, porter, and other fermented liquors. However, fermented liquors such as tuba, basi, tapoy are not included, or excise tax are not imposed on them. We also impose it on tobacco products. So tobacco products includes those that are twisted by hand, and those which are prepared or partially prepared with or without the use of any machine or instruments, or without being pressed or sweetened except as otherwise provided. Fine cut shorts and refuse scraps, clippings, cuttings, stems, and sweepings of tobacco are also included. Cigars and cigarettes are also included. So when we speak of cigars, we mean all rolls of tobacco or any substitute thereof wrapped in leaf tobacco. However, when we speak of cigarettes, we mean that all rolls of finely cut leaf tobacco or any substitute thereof wrapped in paper or any other material. And then lastly would be manufactured oils and other fuels. So this is another category. So this may include lubricating oils and greases. This may include but not limited to bases stock for lube oils and greases, high vacuum distillates, aromatic extracts, and other similar preparations, and additives for lubricating oils and greases, whether they are petroleum based or not. Processed gas, waxes, and petrolatum on denatured alcohol to be used for motive power, kerosene, gas, and other classification of commercial fuels are also included.
Let us move on to excise tax on miscellaneous articles. First, under Section 149 of the NIRC, it provides that automobiles are subject to the imposition of excise taxes. Under Section 100, those four or more motor vehicles, regardless of seating capacity, which is propelled by gasoline, diesel, electricity, or any other motive power. However, we should note that the NIRC expressly provides that buses, trucks, cargo vans, jeepneys, jeepney substitutes, single cab chassis, special purposes vehicles, automobiles used exclusively within the Freeport zone shall not be considered as automobiles and are exempt from excise taxes. Also, the train law exempts purely electric vehicles and pickups from excise taxes, the rate of which can be seen in the slide. So, the rate of excise tax is based on the net manufacturer's price or importer's selling price of the automobile. So, here is the rates, the lowest of which is 4% and the highest is 50%. We should note, however, that the hybrid vehicles, which are those motor vehicles powered by electric energy, are subject to the 50% of the regular rate of excise taxes. Next, under Section 150 are non-essential goods. Under Section 150, non-essential goods refer to all goods commonly or commercially known as jewelry, whether real or imitation, pearls, precious and semi-precious stones and imitations thereof, and it also includes goods made of or ornamented, mounted or fitted with precious metals or imitations thereof, or ivory, opera glasses, and lorgnettes. Note that the term precious metals in this section shall include platinum, gold, silver, and other metals of similar or greater value. So, non-essential goods also include perfumes and toilet waters, yachts, and other vehicles intended for pleasure or sports. The rate of excise tax is equivalent to 20% based on the wholesale price or the value of importation used by the Bureau of Customs. So, next slide. The train law also included non-essential services and sweetened beverages under Section 150A and Section 150B of the NIRC as subject of the excise tax. Basically, under Section 150-A of NIRC as amended, it defines non-essential services as those invasive cosmetic procedures, surgeries, and body enhancement directed solely towards improving, altering, or enhancing the patient's appearance, and not those which promote the proper function of the body or prevent or treat illness or disease. Thus, the provision shall not apply to procedures necessary to ameliorate a deformity arising from or directly related to a congenital or developmental defect or abnormality, a personal injury resulting from an accident or trauma, or disfiguring disease, tumor, virus, or infection, or cases, treatments covered by the National Health Insurance Program. So in here, the rate of excise tax is 5% based on the gross receipts derived from the performance of services. As for sweetened beverages, such was defined under Section 150B of the NIRC as amended as those non-alcoholic beverages of any constitution, either liquid, powder, or concentrates that are prepackaged and sealed in accordance with the Food and Drug Administration. So, those sweetened beverages are those which contain caloric and or non-caloric sweeteners added by the manufacturers, such as sweetened tea, carbonated beverages, sweetened juice drinks, flavored water, etc., etc. However, the NIRC expressly excludes the following: all milk products, 100% natural fruit juices, 100% natural vegetable juices, meal replacement, and medically indicated beverages. Also, ground coffee, instant soluble coffee, and prepackaged powdered coffee products are excluded. In here, next slide please, the rate of excise tax is either 6 pesos per liter of volume capacity on the sweetened beverages using purely caloric sweeteners and purely non-caloric sweeteners or a mix thereof, or the tax of 12 pesos per liter of volume capacity on sweetened beverages using purely high fructose corn syrup or in combination with any caloric or non-caloric sweetener. So next slide please. So lastly, as for the excise tax on mineral products, Section 151 of the NIRC defines mineral products as those things produced and paired in a marketable state by simple treatment processes such as washing or drying, but without undergoing any chemical change or process or owner of the mineral lands. So for this, the rate of excise tax is 4% based on the actual market value of non-metallic minerals and quarry resources, 6% of the fair international price of indigenous petroleum, or based on the weight of domestic or imported coal and coke in metric tons.
Wait po, Smona. Okay, so let's continue with regard to question number 5. When is excise tax payable? So filing of return and payment of excise tax on domestic products. The return shall be filed and the excise tax paid by the manufacturer or producer before removal of domestic products from place of production, provided that the excise tax on non-metallic mineral or mineral products or quarry resources shall be due and payable upon removal of such products from the locality where mined or extracted. But with respect to the excise tax on locally produced or extracted metallic mineral or mineral products, the person liable shall file a return and pay the tax within 15 days after the end of the calendar quarter when such products were removed, subject to such conditions as may be prescribed by rules and regulations to be promulgated by the Secretary of Finance upon recommendation of the Commissioner. With regard to the filing of return and payment of excise tax on imported products, it must be paid prior to the release of the article from customs custody.
So, where is excise tax payable? So, place of filing of return and payment of the tax. So, just like any other tax, so except as the commissioner otherwise permits, the return shall be filed with and the tax paid to any authorized agent, bank, or revenue collection officer or duly authorized city or municipal treasurer in the Philippines. So, Just like here in Benguet, in each municipality, for the convenience of the taxpayer, there is an assigned revenue collection officer. So you don't have to go to the bank, or you don't have to go to the BIR office itself, because there are assigned collection officers to which you can pay your taxes. And also, since the BIR already provides e-services as well, or online services, so aside from paying to any authorized agent banks of the excise tax or any other tax to the BIR office itself or to the municipal treasurer, you can also file and pay your taxes through online, through the e-services offered by the bureau, just like the GCash, or also what we call the EFPS, or the electronic services and electronic filing and payment services. So for the convenience of the taxpayers, so use the e-services of the BIR.